Hello, 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 and happy Sunday evening. My name is Adam Kahn, and this is my half-assed channel. Those of you who don't know me, I was a commodities trader in Chicago for a long time. Um, I've owned a few restaurants. I do mortgages as well. Been trading since I was a kid, but so everybody's aware, I'm not a financial planner, not an accountant, and I'm not a lawyer. Please use any of the information on my channel for entertainment purposes only and reach out to your financial planner, your accountant, or your lawyer for any financial decisions you make. I'm just a guy sharing the information I've learned over the years, right or wrong. So I hope you just enjoy it for entertainment purposes. So, watching all of these people getting super nervous, talking how the dollar is going to be like the Zimbabwe dollar and worthless, talking about how housing's going to fall another 30, 40, 50% from where it is now. I call you on it. I think you're wrong. I'll take the other side. I'll take the other side of all of it. Like, I'm not in the position, so don't hear it the wrong way, but really, like, especially to one of the guys, I'd be willing to make a bet with him that he's wrong about his perception of the market. Um, I just don't see it that way. And to be quite honest, while I'm watching everybody get more and more nervous, I'm getting more and more comfortable that it's time to dig in on the other side. A lot of it doesn't even make sense to me. I mean, housing still looks expensive. Interest rates are on the higher end. The payments people seem to be comfortable with are a lot higher than what I'm accustomed to on the side of helping with the mortgages. But the demand is still there. So hard to imagine that there'll be anything that really stops that unless the Fed just keeps pushing interest rates higher and higher to cause it to be worse. But I think they're kind of stuck in the corner here where there are only so many things they want to break in the meantime. And what's happening with the banks system is a direct relationship to what they're doing. So I want to explain a little of what's going on at the banks and why they're having problems because they, other than maybe marking their trades to the market when they close, they didn't take on the type of risk that should cause the type of fallout that's going on. So when people put their money in the bank, the banks oftentimes use that money to invest, but not the way that people often think. They'll do things like buy treasuries because they're a safe investment. The thing is while treasuries have a fixed return of interest that they pay, the actual price of that treasury note goes up and down dependent on the rest of the market. So let's say you're Silicon Valley Bank and you've got 200 billion in deposits. Well, how much of that do you expect to be withdrawn on a given day? You're probably well aware of your typical inflows and outflows, and you have some ability to recognize variance and how much to expect, even in an extreme case. But it's very reasonable that they would take a large portion of that and buy treasury notes with it. So on 200 billion, and I'm totally making up my numbers because I'm not in the banking business. But if they took three-quarters of that and put 150 billion in treasury notes, and then the Fed starts raising rates, well, if they're able to hold those notes to maturity, because the typical ebbs and flows of how many people are borrowing and lending and everything else, it's really not that big a deal. But if there's a huge demand for that money to be withdrawn, and the bank actually has to come up with the cash, they get put in a position where they have to sell those notes. And since the 1% notes are no longer as valuable as they used to be because the Fed has moved rates to 4 and 5%, so if you now need to sell a bond that only pays 1%, it's not going to have the same value it did when you originally purchased that. So that's what ended up happening is they had huge demand for cash. They got forced in a position to sell treasury notes, which should be pretty safe bets. The problem is the way that the Fed moved the rates so much, all of a sudden those notes lost their values. Again, if they were able to hold them to maturity and people didn't have demand to take the money out, it never would have been quite an issue. Very different than some of the things you've seen from what Sam Bankman-Fried did or some of the other stuff where they actually were using customers' money to make trades and things of that nature. This is not what was going on here. And the thing is, depending on what the Fed does to guarantee other deposits, they actually could cause an additional problem to some of the smaller banks if they start implying that they won't guarantee those and they'll only guarantee the bigger ones because they're worried about the systemic risk. Problem I see with that is that really just gives the big banks more and more power because, oh, now I can't keep my money in another bank, and it causes a lack of fair competition. It just isn't the right thing to do. If the Fed's going to guarantee them, they need to guarantee them, and not delineate between only if it's systemic risk. That's just not fair to the players involved from an outsider. Like, I'm not in the banking business again. It makes no difference to me outside of, I just don't think that's right. Like, how dare you force depositors to move to the big banks and start squeezing out the little ones? I don't know that that's the case, but it sure seems that way, and it bugs me. But it is what it is. Now, while all this panic is going on, stock markets continue to rally on a consistent basis. And honestly, outside of Friday, going into the weekend where they were like, oh, what other banks are going to fail? And I saw that as an opportunity to buy some things. At least tonight, equities are up. Last I looked, they were up 23 or 24 handles. Currencies look fine and everything else. I'm not really sure I see much changing. There was enough panic this past week that was good panic. I would hope to see the markets continue to go higher for a little while until they get stretched the other way. The only thing that bothers me is how much Bitcoin's rallied. That just throws me off. I don't know if that's a fear indication or if it'll in the past it seemed to move with the markets despite the fact that people always said, it's more like gold and things of that nature. It tended to go up when stocks went up and come down when they went down. It's really outpacing the market now. Last I looked at, I mean, today traded over 28,000 a Bitcoin. That's pretty amazing since it was 16,000 a month or a month and a half, maybe 2 months ago. Um, that's quite a move. In some ways, makes me a little bit nervous. In some ways, I hope it just keeps going and going and going. Crypto is one of those things I kind of stay away from, and I don't know enough about it to get too involved. I do keep an eye on it out of curiosity, um, but I watch the currencies more. Even the whole thing, like maybe the U.S. inflates our way out of it, and then to that point, well, stocks and real estate and collectibles and things of that nature will just become worth more dollars because the dollars will have less value since we've inflated it. I do see that as a potential way out of it, but I wouldn't compare it to the Zimbabwe dollar or say that it would be worthless or anything like that. Um, uh, there are other concerns. I look at all sorts of things. I really love real estate. That's my biggest passion. To the point that I've looked at overseas and what's going on there and everything else. And when I look, especially in Asia, it looks like some of these countries really overbuilt the past few years when there was a lack of inventory during COVID. That didn't happen here. The builders learned their lesson in 2008 because that's what happened here. Um, and I think that might be going on. I've been looking in Kuala Lumpur and Thailand and in some of these areas at some of the properties because while the dollar's gotten super strong, in some respects, when I look at what you get for the money, you get a lot, but I don't know that that means the prices necessarily go up because if they've overbuilt, they could have a big correction coming even their way. Um, I guess that remains to be said. But in terms of like the Las Vegas market, well, hard to imagine we have some big collapse. I keep talking about, and I mentioned it a zillion times. One of the major differences are the loans that are in place. You have a completely different scenario, and every time it is different. This is not 2008. And part of what makes the sales pitch of all those people talking about, oh, it's 2008, it's 2008, is it's so recent, it's fresh in people's minds, so they're worried about it. But there's so many factors that are so different. So let's go back to them. In fact, let's go back to 2002, 2003, 2004, when what started to cause that were the loans that people were offering. Don't know how many of you were involved or aware, but they had this option arm program that had four different choices of how you can make your mortgage payment. You had the smallest payment, then the next one, and then the largest. And it went from what's called negatively amortized payment, which means you're actually adding on how much you owe on your mortgage by making that smallest payment. The next payment was interest only, so you're not actually owing more like you were on the smallest. Then you had one that paid a little bit of principal, and then you had your traditional fully amortized payment, which included your principal and interest and everything else. Well, my guess is 90% of the people liked the smallest payment, right? I mean, it's just a logical conclusion. What they didn't understand about these loans, even if it was explained, is after 5 years, they seasoned and they turned into a regular mortgage where you had no option but to pay the full amortized payment. Now, if you were making the lowest payment and actually adding on to how much principal you owed, by the time that matured, you actually owed more per month than your largest payment in the beginning. So let's add to that same scenarios today. Let's say you bought a house for 300,000 or 400,000 in '03 or '04, and it's drifted up over the years because remember the housing went up a good bit. Now let's say you were a little later into the game. Same problems. As the housing started to correct, and let's say you bought it for 300,000 and now it's 5. As it starts to fall to 4 and back close to maybe your 3, your payment's gone from whatever that smallest payment was to now the largest plus a little. And usually there was somewhere between 3 and 4 times what your payment was. So if you bought a home with an $800 payment, you're now looking at close to 3,000 a month. At the same time that housing prices are going lower. So you could see an opportunity to move into your neighbor's house and start all over with a lower payment, and possibly if the house had already fallen far enough, maybe even it was lower in price as well. Now, fast forward to today, where yes, we've had the same move in prices, but let's talk about the loans that are in place. Well, even before COVID, rates were in the low fours. Then you go into COVID, where the Fed brought the rates down even lower to help hold the economy up and pushed them pretty close to 3 or below. So you've got a bunch of people who have these low fixed interest rates for a long time, and the prices went up. In an environment where the rates have now gone up as well. So you move an interest rate, let's not go to the extreme and call it the 7% where it was last week. Let's say we're only at 5, 5.5, even let's call it 5. But most people who got in when we're talking about have a 3% interest rate and they have equity in the property. As the houses start to correct and come down in value, which they have, even here in Las Vegas, we're down maybe 15% off the highs. Well, why would somebody move from a fixed 3% interest rate to somewhere else at 5.5 when all the costs involved have gone up at the same time? I just don't see a big influx coming in the same way because nobody's payment has changed outside of typical taxes and insurance increases. Like nobody's caught off guard with some surprise your loan changed after this amount of time. And then let's talk about all the Airbnbers and everybody else that people who like to point to why it's going to collapse. Remember, a good portion of those people are pretty well off and pretty well funded. So what ends up happening is, yeah, some of them get upset with the investment and get out, and some might be overextended and get out as well. But some just have a decision to make of do I take a lower return on investment or possibly a small loss to rent out at not what I expected to get, or do I get out and move on to the next? It doesn't become this panic, oh, my payment went from $800 to 3,000 and the house is worth less, and oh my God, oh my God, oh my God. It's just so different this time. Yes, we have some banking issues and we have other things that are quite scary. But when people get scared, that's when you want to be thinking to buy and look for opportunities. The only disconnect for me is that, yeah, it looks expensive. Like it's hard for me to see the prices where they are now and think this is a bottom, but everything else indicates it sure is. My trading instincts are telling me, yeah, people are panicked and they're getting out of stuff to raise capital. When anybody's getting out of valuable things to raise cash, that creates an opportunity to pick up those valuable things. whether it's stocks, bonds, houses, collectibles, anything. Eh, Probably good opportunity. I'm not saying it is. Remember, I'm not a financial planner, not a lawyer, not an accountant. But I'm sure saying I wouldn't be listening to all those guys talking about how it's going to collapse because all of their economic indicators are all things that are on CNBC. There's nothing here that they're finding that's any surprise to the markets. Or they don't have any insight outside of they're watching TV and that's what the television's telling them. And quite honestly, generally, when everybody's going one way, I want to be looking the other way. Like, I got one guy on there, like, I don't know if I said it in this video or I just thought it or I said it to my brother, like, I'd bet him he's wrong. I just don't see it happening. And he's so sure of it. It's like anytime anybody gets that sure, they're typically incorrect. They're overexcited. Uh, I try to just go with what the markets are doing and don't, the rest is noise. And for those of you that might be considering buying your home for your family, oh my God, don't even listen to it. Is your job secure? Have you saved up enough money? Are you staying in a comfortable budget? That's really all you should be paying attention to. And then whatever is available at the right prices, you have your pick of the things that fit that price range. And that is the market right now. Trying to guess what it's going to be 6 months, a year from now, if those guys were that good at it, that's what they would be doing, and they wouldn't just be talking about it. I don't know. How many? The one person I was talking to, my first question is, "Do you own your home?" When he's saying it's going to drop 40%, the answer is yes. Well, are you thinking of selling it? No. Well, why not? You just told me it's going to drop 40%. Even on the low end of what houses are here in Vegas, that's $400,000 or $500,000 home. You're telling me you can't use $250,000? If you think it's going to fall 50%, why would you be owning your home? I think the answer is because he might be wrong. I know he wouldn't say that, but it's how I feel about anything. And quite honestly, on the spectrum, I want to be a home owner. I don't want to be a renter. If I want to paint my walls pink, I want to paint my walls pink. And if I want to rip out the carpet for some stupid reason and just have dirt underneath, well, it's my home. I can do what I want. I don't want to rent it and have to deal with the rules of somebody else. I like to be in control of that stuff. So it's my 2 cents. I mean, I hope you guys like the information. I hope I explained the banking stuff a little bit. Feel free to comment, chime in. Happy to talk about any of it. If you give me something that's interesting, I'm easily swayed into seeing a different perspective. I'm not easily swayed when I just think there's a lot of panic out there. One other thing. I mean, so I was fortunate enough to get to spend the day today. We went hiking with some friends, and then we went out to lunch at a pizza Italian type of place, quite crowded. Then we went to Costco, quite crowded. Everywhere I go is quite crowded. I constantly hear people talking about the economy and how much it's terrible and it's struggling and people are stretched and credit card. Well, I get that comment, but my God, tickets to a sporting event are $1,000 a ticket and they're selling out every game. Until that stops, I'm going to say the economy is doing just fine. Sure looks like people are out there spending money and enjoying their lives while they complain that things are going to get terrible. Hopefully that goes on for the next 20 years. I mean, that's called life. You have to make decisions. Oh, and this was the other thing I saw. Guy talking about auto market and why this means that we're in for a huge correction. I don't remember the exact numbers, but something about the average car being 35,000 2 3 years ago. Now it's 42. And while interest rates on buying a car went from 0 to 6%, the average payment now is from 575 to 9 whatever it is, 60% difference. How can anybody afford that? Well, I'll tell you why. Because somebody going to buy a car has their budget of what they can afford. And if their budget was $600 and before they were able to afford an Accord and now they can just get a Civic or they have to buy a used car, this or that, well, that's what they do. It doesn't mean they necessarily don't buy a car or that they still buy the same car because now that's the car they have to have and they can't afford it and they're only going to be able to afford the payments for a certain amount of time before they just can't make it. No, they probably just buy a lesser car because that's what they can afford. Why that doesn't seem to equate for people into a house, I think they better get used to that or they'll never own. Like, that's why I get so annoyed at the ones who are saying it's going to collapse, it's going to collapse. People adjust, they don't stop living. So, unless they think their job is insecure, and really, a lot of those job losses in Silicon Valley, if they're highly skilled people, they're going to have good opportunity somewhere else. It's not like they're just going to be unemployed going from a $300,000 a year computer programmer to working at a fast food place. They'll find something somewhere in between, even if they have to take a step down. But same thing, they're going to find a job and make a little less or a little bit more and readjust to whatever that equates to. Why everybody thinks that means housing's going to fall 40% and stocks are going to fall this far and this and that, when it's already had a nice correction. So maybe we've seen what we're going to see. Not guaranteeing it. I just think I would rather be taking the other side already, and maybe I'm a little early, but I don't know. I'm okay with that. So while you guys all panic, I'll try to stay calm and stay long. Um, and when there's another big boom, as everybody thinks and talks about it going to the moon, well, hopefully I'm diligent enough to get out then. But I'll wait until everybody thinks it's going to a million again before I look to sell stuff. Hopefully that's a good 10, 15 years away. So, again, like, subscribe, make some comments, tell me why I'm an idiot. Happy to chat about any of it. Have a great Sunday. Have a great week. I'm sure I'll be talking to you all week long.